Welcome back to the Eric Krown Crypto channel, and welcome legends. That's right, legends, welcome to the Krown Crypto Cave. Keep on seeing this damn legend talk everywhere I go on the interwebs, especially Twitter. It's like we're not all fucking legends, man. I'm a nerd just looking at Magic Net money, and there is nothing legendary about that. I'm basically providing very little value to the world, but doesn't matter because I'm a believer in Satoshi, and that makes it all good. Anyways, in a more sincere tone, I do want to take today's analysis in a bit of a different direction because of the events of yesterday with the Silvergate Bank, with the Silicon Valley Bank, and whatever the hell else comes from that particular issue. Now, the big issue is, of course, relative to crypto, is going to be looking at USDC because that is Circle's product, and they were holding some of their, reserves, I suppose, with one of those banks, and not doing too well right now, as we'll go over. So I just want to kind of issue a bit of a warning with that and a bit of a consideration, especially if you're going to be trading over the weekend, which personally speaking, I just think it'd be better to maybe go to Vegas, or do some online gambling. Although, maybe not. Maybe just masturbates with sandpaper. That's also good as well. Anyways, yes, so over here, before we get into it, I should let you know that you can get the Jewel Light for free for 1 month if you follow the process within this particular pane that my cursor is currently on right now. Anyways, let me just make sure that I'm recording, the microphone's working, everything's all good in the hood. Yes, indeed we are. So let's just jump right into it right on over here. And we're going to start off with a chart of USDC, which is Circle's stablecoin, versus USD. So being a stablecoin, it is supposed to be at around parity, which is $1. It can oscillate a little bit from that number, as we have certainly seen in the past, quick spikes here and there to the upside and the downside, but not. God damn this stupid fucking computer. Elsa, I bought Elsa this stupid Apple computer, and it talks, and it's driving me nuts. I'll never buy another Apple product again. Oh my fucking God. Why does it have to be this way, man? Why does it have to be this way? Anyways, so, you've seen these quick wicks to the upside and downside, but always, closing back around parity, which is $1, which is what you want a stablecoin to be doing. It's supposed to be, stable, as the name would imply, not having, 10%, 15% swings like we're seeing right now. So if we go down to an hourly, I think it better illustrates it. Just even a few minutes ago before I started recording, the pair USDC was trading at 10% discount at around 90 cents now at about 94, 95 cents or so. To the dollar. So what does that mean? It means that if you're trading these pairs, well, you're going to see things kind of whip around a lot more. And if you're looking at tentacles from these particular regions, they're probably going to operate in really weird ways. So I would say that if your main edge is looking at tentacles, it's probably going to be massively diminished today, also being that it is, a weekend as well. Weird things typically do happen. You can also see it over here on the right-hand side of my screen, right? And I'll just highlight this chart, or where my cursor is currently on right now. This is the price of Bitcoin versus Tether on Bybit, which is trading at 20,187. Keep that number in the back of your mind. Let's go over and see what the perps are trading on Bitmet, or actually this would be Bybit as well. This would be 20,290. What is accounting for the discrepancy there? Well, obviously the dollar is measured differently against Tether. Thus, Bitcoin versus the dollar, or dollar derivatives, will have a naturally higher price. Bitcoin versus Tether will naturally have a lower price. If we go and look at the price of USDC versus USDT, it looks very clear that people are selling their USDC to go into Tether, which is really funny. I don't know about funny. It's like weird, but it's like maybe for weird it's funny. Maybe to me it's funny as well. But if you're interested in these such things, Tether's always been thought of as like the big potential black swan in this in this industry. People have always looked at Tether as like, Tether is a ticking time bomb. It's not good. Who knows what the hell they're holding there? Well, for whatever reason, it stood the test of time to this date, and people actually flying to there, I guess, as like a precaution of safety, getting out of USDC. Right now, USDC compared to USDT trading at about a 12% discount to parity. Again, this one just like the US dollar derivative. Actually, this one even more stable. It's kind of interesting. But if we go down again to the lower term timeframes, it seems very clear that people are getting out of DC and into DT. or circle out into Tether. You get what I'm saying. Anyways, so these are going to account for like different prices amongst different pairings depending upon whether you're using Tether, USDC, or US dollar. We can even see on the index over here it's trading at a massive premium, 20,600 plus. So do be aware of these things, because obviously it's just going to get fucking weird today, and probably tomorrow as well, probably until the dust settles, which will be early next week. And then also guess what you got next week? Oh man, you're going to fucking love this. CPI and PPI. Everyone's going to get fucking bent over and rammed like a I don't have anything to say to that. Anyways, now let's follow up on yesterday's analysis. We were looking at a bounce off of about 19,500. It's very, very likely based off a couple things. One of them was going to be the 5-day Gaussian channel over here, hitting the bottom side of the 5-day band. Right here, again at that 19,500 number or so. Actually, in this case, we're looking at the index, so the price is going to be a little bit higher. If we go over here, yeah, that's a little bit closer. Anyways, I like looking at this one because it has more history. Anyways, that's besides the point. Also, that was the sort of risky area to be looking at to the downside based off of the rejection from the mean band, which we got all throughout the month of February. Something that we were keeping a close eye on, which was essentially going to be kind of like a green light saying, hey, it's time to be looking for either higher in 27 to 28,000 bucks if Bitcoin were to close above this region. But if Bitcoin continues to get rejected by this region, which certainly did, confirmed in early March, well, a retest of the bottom side of the band is reasonable to be looking at. Also, we were looking at the 4-hour HPDR indicator over here, which was showing the 95. Oh, actually, let me switch back to my regular view here. Yeah, to make charts look a little bit better. We are looking at the bottom side of this green zone right here. Let me just kind of zero in on it. This zone right here, we're saying, hey, look, Bitcoin probably makes a little bit of a new intraday low, but it's probably going to be a wick low and probably going to be bouncing from that region. Why is that? Because this green area is going to represent the bottom side of the 95% of historic returns range lows. That means it's very fucking unlikely Bitcoin was going to go lower than that. Certainly can happen, obviously, but when we're talking about probabilities, like they're starting to be a lot more in favor of you around this region. Especially as volatility started to decline coming off of these extremes right here. Bitcoin did get nearly, actually more than $1,000 bounce, about a $1,300 bounce, $1,400 bounce off of the lows. Anyways, if we are once again going to be referencing the 4-hour time frame in this particular area, this would actually be a really, really good place for a pullback, regardless whether you're bullish or bearish in this case. Intraday here on Saturday, where can price action come back down to? I mean, low 20,000 bucks is certainly like very, very reasonable. If things get a little bit crazier over the weekend and you start to see closures below 20,000 bucks on a 4-hour, 6-hour time frame, it's always difficult on the weekend, but at that point, perhaps a retest of the lows, maybe even another low. But I wouldn't really be looking for Bitcoin to trend towards new lows unless if this next thing happens over here, which is going to be on a daily, which is actually looking like it's becoming increasingly more likely. If you see today close below the bottom side of the blue, or the kind of like cyan color here, which represents the 80% of historical returns range lows, that's at the point where, hey, there is risk of another move to a new low over the weekend here, probably somewhere around like 19,000 to 19,100 or so. That'd be the bottom side of the 90% of historic returns range lows. Again, very likely a bounce right there, similar to yesterday, but bounce not the same thing as reversal. Bounce definitely not the same thing as reversal, as we said yesterday, because, well, you can see that this one's quickly getting faded. And again, with all the things going on right now, I would not feel too compelled by anything like this unless we start to see some price action into next week, really closing above some specific some major pivots, namely the mid 20,000s. But until then, risk remains to the downside, and this current low this range low right here is 20,200. That means that if you start to see daily closures below that region today, that means today, Saturday, maybe quite likely a retest of the current lows. At that point, maybe even new lows towards 19,100. Then I want to go back to this chart over here, because this is the big one that's going to really be judging for myself. Is it reasonable to be expecting like significantly lower, like maybe even a retest of the current lows? Or I shouldn't really say a retest of the current lows just yet, but maybe down to like low $18,000 to 18,500. Well, if you see the 5-day time frame close below the bottom side of the Gaussian channel here, which is in the what is it, like 19700-ish region, which is actually going to be closed tonight, so we'll have a chance to do this, I guess. But if you start to see it close below that region, at that point, that's when we can start to look at mid to low $18,000 as relevant. What else? And of course, that doesn't just like go by the wayside after tonight's closure. Over the next 5 days, assuming that it's kind of still hanging around here and we don't get like a major bounce before end of day, it's gonna have another chance to do that again. And this week would really be the week for it to do, because we're getting all this all this contagion, all this information coming out, and probably going to be resolved next week. Probably also going to start to die down next week as well, to be honest. But again, with CPI and PPI coming out, if things really are going to fall from here, that would be a pretty damn good backdrop from an event perspective to kind of get that going. But for right now, again, one thing before the next, that would be my main area looking for and kind of deciphering if looking for significantly lower targets is going to be relevant. Until then, bounces from this region, a little bit more likely than not. And then we want to or at least I really want to be looking at where the daily kind of lands itself. So if the daily does continue to close above 20,200, that's at the point where, hey, Bitcoin might Bitcoin still has a chance to dig in here and trade back up, north of $21,000. And that's at the point where we start to reference this chart yet again, which still has yet. It's like we've been marching this one down for like almost a week now. Still has yet to provide a counter signal or a counter setup in this case. So let me just briefly speak about this as well. On the daily here, for the daily stochastic oscillator, we've seen many times in the past 3 years, that is, many times, 14 to be exact, where the daily stochastic oscillator has gotten to about 15 and then crossed up. When we've seen that happen, we've seen some pretty epic bounces, or at least there's a higher probability of an epic bounce. In this case, we can reference the statistics over here. 10 of the last 14 ones over the past 3 years did have about a 71.5% strike rate for having a pretty sizable bounce, somewhere between about 10%, maybe even all the way to 25%, with an average of about 17.5%. So here's the thing, just like yesterday, just like the day before, just like the day before that, just like the day before that, the conditions were not met to see the daily stochastic oscillator pivot to the upside. The new conditions that must be met for today in order to initiate, though that sort of a setup to be reasonable, or sorry, not reasonable, but active, I guess, would have to be a daily closure above 20,300. Right now, Bitcoin trading almost $200 below that particular region. So, do be aware of these things. As the Bitcoin remains below that, if it still continues to close below that region, and also, probably would simultaneously be closing below this on the daily as well. Yeah, I mean, another sweep to the down, or sorry, another move to the downside, like that's reasonable. Same shit as before. So yeah, I think that's probably about where I want to be leaving things today. That also does imply the opposite as well, that if Bitcoin does close above that region, you start to see, really like 20,300. At that point, we could probably be looking at like a sizable bounce over the next, I think it's like 1 to 3 weeks is the average time frame on this, the first standard deviation on this with an average of about 10 days. So ultimately, a few things to be looking for. At the end of the day, I think that today is just going to be fraught with peril as far as trading goes. When you're looking at the numbers of it, I mean, when you see this big of differences between Tether, between USD, between USDC, like this is not the time to be risking it, especially over a weekend as well. Anyways, I think that's a good place for me to be leaving off on this particular video. Once again, I want to let you know that we're going to be having a sale starting Monday. So hold off on purchasing anything in the interim, or at least I would suggest to, just a little bit of patience. You'll save yourself a few bucks there. And yeah, I think that's a good place to be leaving off. As always, wish you the best. Take care, much love, and oh fuck, I forgot to mention it. By the way, if you're trying to understand the current situation, what's going on, check out Elio Trades. He's been releasing some phenomenal videos as of late, or he typically does. But the most recent one talking about this situation does it really, really well in a way that like Elsa can understand. Not because like she's stupid or anything, just she's not like in the financial sector. Like she doesn't, this is not like her like main thing. She knows shit about makeup and stuff like that. But, after listening to his video, she's like, oh, I get it. It's not good, which was her synopsis. And that's what I'll leave you with today. Take care, much love, and see you hopefully soon.